Hey guys, Akiba back for the next episode of the SlateCast. It's a really interesting, is probably a nice way of putting it in terms of interesting time at the moment in crypto. And we're going to take a little bit of a break from that. So if you're kind of tired of looking at the charts right now, this podcast, we will touch on what's going on at the moment. We're going to talk about a new protocol on a new project that's coming out. So stick with us. This is going to be hopefully nice and cathartic for everyone. So stick with us. Going to run the intro and we'll be right back. Okay, let's get going. Justin from Astaria, how are you doing, my friend? How is I just said that we're going to try and make this a bit of a cathartic episode, but I mean, it may be a bit of a lie. It's going to be hard not to talk about what's going on at the moment. How are you finding things at the moment? We can treat it like a little bit of like a support group for people out there. So like how are you feeling at the moment? What are you doing to sort of cope with the downturns? And sort of, I imagine you've been in the space for a while, so it's not really too new to you.
Yeah, well, it's definitely surprising, that's for sure. So I'm certainly shocked. Fortunately, I don't really know anyone that was really affected personally from the situation. So I'm based in the U.S., so most of the folks I know are in the U.S., and obviously most U.S. people did not have access to the .com version of FTX, just the FTX U.S. version, which I don't really think anyone used too much. So yeah, I mean, it's certainly a shame for folks that have their funds trapped in. Was really sad to see that some people just sort of like held on to the end and stayed in FTX. But it's a tough time for the industry. I think it's really the price is going to do its thing, and I'm sure there's some downward pressure ahead. I'm less concerned about that and more just that Sam was so in bed with politicians, regulators. From what I read, he was the second largest donor to Democrats. So people really knew this person, and I think with the split Congress that we're likely going to see based in the election in the U.S., like regulation is less likely in the next few years. But I think this just sort of pushes us back because it's certainly not a good look that the one person that was supposed to be responsible and do the right thing was really just gambling with user funds, is what it appears like. I mean, we don't have the full details, but it looks like there was about a $6 billion hole in the FTX balance sheet. That money had to go somewhere, and right now it's presumed that they were basically just gambling with user funds, which is terrible.
It's difficult. We try to do a deep dive into sort of any known FTX wallets, Alameda wallets related to DeFi. Because obviously during the kind of the May crash spot from sort of the whole Terra Luna thing, and then like the 3AC aspect of it, the beauty of crypto is that a lot of it's on chain and a lot of it's transparent. I think what's kind of interesting with this one for me is that I think a lot of people have been looking towards SBF as maybe being one of the villains of crypto. There was people on both sides of the fence, but I think few people saw it to be like a liquidity crunch that was coming their way. Like maybe some dodgy deals, maybe some sort of manipulation of price of other projects or things that have been kind of rumors in the air. But yeah, the fact that they were just lost of funds. I mean, I wrote a piece yesterday that the on-chain data was suggesting their Bitcoin balance was actually negative. I mean, it couldn't have been, but it shows that they were actually in Bitcoin. They had less on the exchange than they actually owed to customers, and that's not where we want to be. But aside from that, I am completely with you. And every conference I've been to, every person I've spoke to, everyone working in the industry doesn't really care about the price. It's about building. It's about the growth of the infrastructure. So with that, what are you working on at the moment with Astaria? And yeah, just give us a bit of a background on the project and what we can expect coming forward.
Yeah, sure. It's a pretty big transition there, but yeah, we're building a project called Astaria, and so our company mission here is is effectively to unlock instant liquidity for every on-chain asset. So to start, we're launching, to reach that goal eventually. That's more of a 5 to 10-year goal. But to reach that goal in the near term, we'll be launching an NFT lending marketplace, meaning that people can borrow against their value of their NFTs. And today, that generally means like probably one of the most common use cases is borrowing against NFTs in the traditional sense, like what you would think of when you think of a Bored Ape, a Punk, et cetera, et cetera. But we'll be supporting any NFT. So another great example is like a Uniswap V3 position. As far as I know, there's really no way to borrow against a Uni V3 position. Maybe there's some tools to leverage up on them on like Maker, but we'll be allowing users to borrow against that. And so we have a pretty different approach than some of the existing platforms like NFTFi or NiftyFi, BendDAO, JPEG. There's several out there. We have a very different approach. And yeah, happy to get into that more, but that's just a quick high level explainer.
Yeah, I'm just wary of just going through the whole issue, because I think we could easily talk for an hour on the current state of crypto and what kind of Sam's done and whether Binance are really going to go through it and the stuff. But I say I'm interested in what's being built. Like ultimately,
Sure.
prices are going to go up and down over the next 18 months, 2 years, 3 years. I'm still massively bullish on this industry, and that's kind of irrespective of price. You mentioned BendDAO there. I remember when there was a bit of a crash a few months ago, there was a lot of attention being brought to their platform around some of the floor prices of apes, and people running into trouble, kind of losing their apes by being liquidated and this such. You say you've got a different approach. How do you differ from some of the other sites that are doing similar things?
Yeah, sure. So right now there's basically more or less two different approaches that are pretty popular. I'll just explain both of them and then I'll talk about what we're doing. So the first would be BendDAO, which you sort of already alluded to. And what BendDAO does, and this approach has had a lot of traction because it's simple and allows you to get instant liquidity, is they basically treat every asset in a given collection as the same, more or less. So they're basically going to auto liquidate you based on the fluctuation of the floor price. And it doesn't matter what piece in that collection you have, you're still borrowing the same amount against your piece. And you're always going to get liquidated, whether you have like a rare Bored Ape or CryptoPunk or whatever it is, or a common one. So again, the benefits here, instant liquidity, like very hard to issue bad debt because we're instantly liquidating. And it's just easier, right? Like you don't need sophisticated actors to come in and price these assets. So that's one side of the spectrum. Of course, the downside is like you're treating every piece the same there. So it's sort of like defeating the purpose of NFTs in general. And that's like pushing us more towards, I think what Kobe said once of like currently NFTs are just altcoins with pictures. So that's one side of things. But again,
Yeah, I mean, when you ignore rarity tables and stuff, then yeah, you're losing a lot of potential like utility from the project itself, aren't you?
yeah, absolutely. And I think it's also, in my view, just a very short-term minded view. Like I'm personally not really bullish on profile picture collections, 10,000, collections or whatever there is out there. I'm more interested in like what we'll see what I think we'll see in the next few years in the NFT space, that go beyond even just art. But so that's one side, the BendDAO, and then you have the total other opposite end of the spectrum, which the most successful project to date, I would say, would be NFTFi or NiftyFi, depending on how you pronounce it. And what they do is they basically do NFT loans, or their marketplace for loans, on a case-by-case basis. So let's just say you come in with an ape, you have to signal that you want a loan. You basically have to like sign a message to request a loan. Then basically you'll get a bunch of offers coming in from different individuals. They'll say, I'll lend you 10 ETH at 10%, and I'll lend you 12 ETH at 15%, whatever it might be. And then the user has to sort of pick a loan. So it's great at giving us like fine-tuned metrics or fine-tuned loan to value ratios and interest rates for specific NFTs, but it's very hard to scale because, ultimately you need a bunch of individuals sort of like scanning through this marketplace, looking at who wants a loan, manually putting in bids or building some sort of bot to do it. And it's just been hard for them to scale. And of course, like for the user, it's not the best experience just because you can't get instant liquidity. There's this bid and ask process. A lot of times the negotiation happens in Discord. But to their credit, like they're offering more competitive terms. Lenders are getting very high rates. I think the average interest rate on NFT, if I last I checked, was between 40 to 50%. So people are paying a lot for this leverage, and we think one of the reasons that rate is so high is just because the market's pretty efficient, just because that model, in our view, doesn't scale well in the current form. But I should say, to their credit, they've had a lot of traction and done very well so far.
So then, what's your approach?
Sure. So we looked at this and sort of tried to see what were the best aspects, the aspects that worked well on each system, and sort of try to combine that into a different model. And so you can think of us sort of like NFTFi, but we actually add what we call a third actor. We call it the 3-actor model. And so we add this third role in our system that we call the strategist. And you can kind of think of this as like a urine strategist. Basically, these are sort of like the NFT appraisal companies or experts in this space that they're exclusively working on building out appraisal models and valuing NFTs. In any case, we've partnered with several strategists that will be writing strategies at launch. But the short explainer is like a strategist can write terms for any infinite number of NFTs they want. These terms get bundled together. They open up a vault, and then anyone can lend money to that vault. And then if you have an asset that has an appraisal from a strategy, you can borrow instantly against that vault. So in a way, it's like if you were to look at the bend down model, allow anyone to appraise any piece, and then sort of all of these appraisers, we call them strategists, are competing with each other to offer the best rates.
Interesting. So, what's the main part of that you feel is going to allow for better to scaling? Because do you not still need lots of appraisers in order to scale?
No, definitely not. So these appraisal companies, like one example that's probably, I would say, the most well-known would be like Upshot, if you're familiar with them. Anyone can just Google and check out their website. I think all their analytics are public. But in any case, they have they specialize in like creating algorithms to appraise different pieces. So I think they have several thousand collections appraised to date, probably a lot more than is necessary or more than people want to borrow against. But there's probably about 10 of these companies that are focused on NFT appraisal. So every really few minutes, they're constantly updating their terms and providing valuations for basically any collection that has like a meaningful amount of trading volume.
So instead of you needing them to actually appraise the pieces on your platform, you're essentially pulling, is it like an API data of their valuations in and matching it with what you've got on your platform?
No, so we're actually helping them integrate directly with us. So we have we're working with all of the appraisals companies. So there's about 10. We'll probably launch with 5 strategists. And we're basically working with them. They can plug their system into our backend. They can post their valuations and update them as frequently as they need to. Those valuations are, of course, converted to terms, meaning like implied loan to value ratios and interest rates. And then the aggregate of those terms spins up a vault that anyone can deploy capital to or borrow against. So you might say, I really like Upshot or Goblin Sachs or Deep NFT Value or Spiciest or whoever the strategist might be. Apologies for leaving anyone out there. But if you really trust a strategist, you might say, I really like their terms. I'm going to lend to those terms. And then, of course, for the user, we're just bubbling up the best loan terms. So if you have an ape or a punk or whatever it is, you don't care who you're borrowing from. It really doesn't matter. You just want the best rate. And so we basically bubble that up.
So it's interesting you talk about kind of the future of NFTs and saying how you're not bullish on the future of NFTs that are PFPs, given that's where a lot of the liquidity is at the moment. Do you feel like a kind of a controversial take to have starting a project such as this?
No, I don't think so. There's some things I'm very excited about in the art space. I love what Artblocks is doing. I'm a proud Squiggle owner, which is awesome. But ultimately, I think it's great for artists, but launching a new 10,000 PFP collection that's like very formulaic, frankly, not that creative, isn't really, it just doesn't excite me. It's totally cool if people speculate on it, but I'm more excited about like more, I guess I could say, like real or financial applications of NFTs.
So tell me, what does excite you?
Yeah, so the first one, and this is like very immediate, is the Uniswap v3 position. So like Uniswap v3 position lending, I think, is going to be incredibly powerful. Hasn't been done before. I think it's going to unlock a ton of value in the system. In addition, we're already seeing, like, if you're familiar with Liquidity, they have a product they call chicken bonds. These are basically like, it's a lot to explain. These are bonds that are basically like NFT positions. Each one is unique, and we're going to hopefully at launch support borrowing against these chicken bonds. And in the longer term, so those are just a couple examples of like financial NFTs or NFTs that have some sort of utility today. In the longer term, though, I'm really excited about, like, as more and more value from the off-chain world comes on-chain, supporting loans against that. Since most of the value in the real world is non-fungible, like I would expect most of the value on-chain eventually to be non-fungible, because how many more ERC20s do we really need, right?
Mhm. It's an interesting approach. I was chatting to Jared Gray, the head chef at Sushi, the other day, and he was voted in through the DAO. With his main message was about pushing Sushi towards kind of asset-backed sort of tokens and bringing things on chain. So it seems like there's maybe. Do you think that it's a trend that we're going to start seeing more of? I mean, you kind of alluded to a degree, but I mean in kind of like the medium term. And do you think we're going to start seeing more things come on chain? And what things would you expect to be kind of the first types of things that we're going to see?
Yeah, I can give you two examples of projects that I know friends are working on right now. So I think the first thing we're going to see when we're talking about bringing real world value on chain is basically like companies that have specialized in custody, and like custody and delivery of real world assets. Like, when I say that, I mean like a watch reseller, or um, a classic car um, collector, etc. So this is in line with the two examples. One friend I have is working on, basically, like, it is going to be centralized at the start, of course, which I think is totally fine. But they effectively appraise value and custody watches, and so, like, a lot of folks in the crypto space, I just have a regular old Apple Watch, so I'm not a watch guy. But a lot of people have like a huge interest in collecting watches, not just for fun, but also for speculation. Like, they believe they can outperform the market by like buying a basket of Rolexes or whatever the hot brand is. In any case, this company would sort of, you would mail in your watch, they would appraise it, they could issue a token on chain representing ownership of that watch, and then like that token could trade freely. So you could fractionalize it and sell it. You could, if you're building a protocol, you could sort of aggregate, 100 Rolexes at 100 tags, and then like allow people to invest in a basket or buy a fraction of a watch. You could borrow against it. You could sell it instantly and get instant liquidity instead of having to do that like off chain in an auction or something. You could just list it on OpenSea or wherever. So that's one example. And then a friend that's a large dealer of classic Lamborghinis in the Florida area is like looking at how they can bring the value of their cars on chain for better price discovery, so that they're not just running an auction in person. They can run an auction that anyone can participate in on chain. And then also they've noticed that like a lot of their collectors are actually like very classic car rich and cash poor. And so getting the ability to offer them liquidity on chain is obviously very doable. So these are just a couple examples, and I hope we see a lot more of these types of things coming online.
Yeah, it's interesting, isn't it? In the traditional finance world, I think borrowing against a car is going to be very difficult, if not nigh impossible. And it's definitely not going to be something you can get instant liquidity from. So I think that's a really interesting aspect. Hmm.
Yeah, because these
Okay, I
these
like it.
classic cars are very illiquid. They're traded infrequently. They're worth hundreds of thousands of dollars, but they don't really have real price discovery. I mean, no one knows. Like, if you had one and you needed to sell it today to buy a house or send your kid to college or whatever it may be, like, it would be a process. Um,
Well, I mean,
I,
it doesn't really. Does it have to be classic cars? Like, if you've got like a, a a 1994 five Ford, I don't know, Fiesta or something that might only be worth $500. Like the ability to like tokenize that, and like you're almost doing like it's like an online pawn shop almost, isn't it, to a degree, where you're getting something out from it. I think
I think
this is an
I think
interesting
the reason
concept.
why the market will start with these like high end pieces is because for it to work, you have to have like a trusted centralized party that's custodying the asset and then sort of like backing it on chain. If it's just me, Justin, like driving around in my car, I can't really borrow against that because, if that NFT is taken from me, sold, fractionalized, like how does that person claim it? So you need to work with providers that are like very specialized on custody, meaning like protecting and securing the asset, storing it in a safe way, and then being able to deliver it anywhere when someone eventually like does want to claim that and sort of burn the on-chain asset and get the physical asset in real life.
I think it's an interesting area to be looking into, and I think it's something that, yeah, technology could probably help solve some of those problems in the future in new innovations. So, what other than sort of we talked about PFPs, we talked about asset-backed tokens, and the sort of the financial aspects of kind of the sort of V3s. What size of market do you feel like this could become? And when you take all of these into context, so when you're planning to launch the project, where do you see kind of the ceiling being for this?
Well, in the short term, I forget what the stats, we were looking at this earlier, but in the short term, there's only a few $100,000 worth of NFT loans originated each day. I think to date, we've probably seen a couple $100 million of NFT backed or loans backed by NFTs. Most of that volume attributed to NFTFi. So today, the market is quite small. Obviously, NFTs are currently a multi-billion-dollar market. Um, it's going to go down, it's going to go up in the future. But I mean, I'd imagine it will be as big as the ERC20 market because, frankly, like the next big use case for the technology of the ERC 721 and just non fungible tokens in general is sort of undiscovered, right? Like, I think these are just things I'm excited about, but I think probably the next wave in this space is something we just can't even think of right now.
There's people talking about the fact of your crypto wallet along with your NFTs being your kind of your online digital identity in the future, and things like POAPs and the such will act as your kind of like your social graph as to where you've been online and how you've interacted with things. So I think the ability to then be able to utilize your digital identity to gain liquidity is kind of an interesting concept as well. Do you think of it from that aspect at all as well? That like these NFTs will be a part of people's lives from things that they've got from being involved with projects, not just necessarily say buying it on OpenSea.
Yeah, it's something we've sort of just briefly talked about indirectly. So we talk a lot about, I mean, this is not something we'll be doing at launch and not something we'll be doing in the first 6 months, but we talk a lot about like on-chain credit, and we've talked to a few projects working in that space. And ultimately, like if your record for your account is totally transparent on the blockchain, which it is, like theoretically, a sophisticated strategist in our system could offer better terms based on the address that wants to borrow. I mean, we have that built in now. So if they see like you personally have a history on NFTFi, you've never defaulted, you've taken out 300 loans, like presumably we might be able to offer, or the strategist, I should say, might be able to safely offer you a slightly better interest rate than someone that's like totally fresh. So we think a lot about stuff like that, but I think it's still very early days. Like I'm not smart enough to think of a way to connect on-chain identity and like provably guarantee that's you or me, for example. Like that seems very tricky.
Yeah, it's an interesting concept. I've not really thought through before, the idea of kind of your wallet's credit score through your activity, and I guess it also then starts to go into ideas of like NFT using NFTs to sort of co-sign for loans and things. Like you could with smart contracts. Like the future is almost endless of what could be done with this technology, and I think it's absolutely fascinating. And we need projects thinking of the different aspects. So when do you launch? Because I was on that website earlier and there's still just a sign up form.
Yeah, we have to update our landing page, but we just completed our third audit and we're going through results there. So we did a code contest through Sherlock, which is similar to Code Arena. If the listeners are familiar, and then we're just scheduling an audit. Actually, our final audit to start a week from today. So it's a little tough to say. Like, I think the audit's scheduled to last for 3 weeks, and then we have a 1 week change period. But that would push us into the holiday times, and we'll be launching in early January, early to mid January is the goal.
Oh, so brilliant. So you're in a position where you're ready to go. You just want to make sure everything's checked, get through your audits, but from a production point of view, you're pretty much there.
On the smart contract side, we're basically 100% there as far as like design, UI, UX, and like just building out our backend infrastructure. There's a little more work to be done. I think the majority of the work for over the next month is reviewing the audit reports and like implementing any changes, and then also like implementing the design for the actual app itself. So which we're obviously in the middle of. Um, and then just sort
Cool.
of lining up and coordinating with all of our launch strategists. That's sort of a heavy feat, making sure that they're all comfortable. We've tested with all of them and they're ready to go at launch. And yeah, we're trying to make a little bit of a splash. We've purchased $10 million of insurance from Nexus Mutual. So we're going to insure the platform as a company for the first 3 months, up to $10 million. And we're debating now if we're going to hard cap or do a soft cap on the UI to only accept 10 million. So we'll see. But yeah, we just want to make sure users are safe because that would be definitely
right
the
now.
worst thing to lose funds. Yeah.
So I mean, that was going to be one of my next question. Does everything happening in the market at the moment affect how you feel about launching something into the Web3 space right now?
Yeah, I don't think it definitely does not change our timeline because, like, at the end of the day, we have to do the best we can do with what we have. But certainly, fewer folks will be excited to take on leverage. I mean, this seems like it's a very risk-off environment to me, at least now. I mean, it could change on a dime another month or two, depending on what happens in the world. You really never know. But we're marching forward and just gonna make the best of what we have. But yeah, I will say just personally, like it's just I'm less excited to tell people I work in crypto today than I was 2 days ago. I don't think it's a great look for our industry what happened. So
No, not at all. But I think also like the meme of bear markets being builder markets. I think the best projects, not just even in crypto, come out of bear markets and getting yourself ready now for a hopeful future bull run. I think it's actually one of the best times to launch, even though you're not going to have like necessarily that kind of moonshot approach straight away, but having more sustained, slow, kind of retainable growth is
yeah,
arguably a better way to go about it anyway.
yeah.
Um,
I mean, if you look at the DeFi, really the on-chain landscape today, it's hard to find more than even a handful of actually innovative, new, useful projects would be. It's hard to find, right? Like,
yeah.
obviously, people
So
see.
just to cut in slightly, like I probably get 5 to 10 requests a day on new DeFi projects to either interview or cover in some way, and yet 9 times out of 10, I'm just not interested for exactly that reason. Like it's not new innovation. Yeah,
Yeah. Yeah, I have
100%.
a YouTube channel as well, so I also get just as much inbound, and it's all just copy paste stuff. I mean, there's Uniswap, Aave, Maker, everything else. I don't really know. I mean, I'm sure I'm missing something. There's some like innovative NFT lending protocols, NFT exchanges, but like at the end of the day, there's really only a handful of innovative, unique applications. And it seems like all of those were built 2017, 18, 19, leading into 2020. So we'll see.
No, certainly. Well, Justin, I mean, it's been an absolute pleasure and so we talked a little bit about what's going on in the market, but to just talk about the future for a little while and kind of where things can go with NFTs. And I think it's really interesting. So for this episode of the SlateCast, everyone, check out Astaria. Likely, you're going to say early January is likely going to be the time.
Yep. Yeah.
Yeah.
So if you follow us on Twitter, you'll see every update we put out publicly.
Yep. I was going to say, do you have a Discord or anything as well?
We
Or
do. Yeah. It's linked on the Twitter. So that's probably the easiest way to find it.
cool. So head over onto the Twitter and you can get involved with there. Just stick around in the backstage area for a second before you go. But for this episode of the SlateCast, thank you very much for joining me, Justin. It's been an absolute pleasure talking to you. And we'll see you all again next time. Thank you. Goodbye.
Thank you so much.
Cheers.